All right. Good afternoon, Simpler family. I hope you had a wonderful holiday week last week and had a great weekend recovering from all the festivities. I know I did, and I hope you did as well. Thanks, Mirza and Omar. Appreciate all of your support in the background. Y'all do a bang up job. So thank you very much. All right, fam. Today I'm going to talk about how I use Fibonacci levels to stay in winning trades. I have been using this system for uh, 2 years, about 2 years now, and it has helped me after I have trimmed some profits to stay in winning trades to target. So today I actually have a trade up that in the trendy room here at Simpler, we got long GLD calls for January 3rd expiration, trading them going long down here in a demand zone. I'm a supply and demand trader, so I like to buy the dip when names pull down into demand zones. And today I was watching GC futures, they were performing better than the overall market, giving me a bullish bias. They were also opening up very close to this demand zone. So I got in some long calls, half allocation here with plans to add at 239.28. I'm looking at a 30-minute chart right now, and I wanted to show you to demonstrate how we can stay in this winning trade. First off, I have trimmed one of four contracts that I purchased this morning. So one of the four, a quarter of my position, has netted profit. And so now I'm going to use Fibonacci levels to stay in this trade. So right up here, we have an inside and down candle formation. I have another trim here at 240.65. That is just a fib level on the chart that in the event we get up here, it is a level that I will take additional profits at. You can see I like to have my buys and sell in ahead of time before price gets there. And so for this position, I will trim here at 240.65, and then I will trim again when price comes into the PMZ zone. Because price is below it, this is resistance now. And so I want to take more profits here. But how do I stay in this winning trade and continue to shoot for these higher price targets? What I like to do is use Fibonacci levels and, in particular, the 38.2. So if I measure the move up using the Fibonacci retracement tool, where the move up began up to the high, that's going to give me a 38.2 on this particular trade of 240.14. Now, what I want to do is create an alert there at or below and make a note to myself that this is the bottom of the bull channel. The bull channel is the area between the 236 and the 382. I want to stay in the trade as long as the 30-minute candle, since we're in the middle of the day, I'm using a 30-minute candle, as long as those 30-minute candles close above 240.14. So I'm going to create my alert right here. And then if this alert goes off, it's going to pop up a message over here that we're at the bottom of the bull channel, and I need to watch for the 30-minute candle to close. All right. So this is an example of a trade that I am just day trading. Now, you can use the same philosophy or the same strategy to stay in winning trades on higher time frame charts. So, for a swing trade, for instance, on Amazon, if I were, and I'm not in this, but if I were, I'm going to show you how I would stay in the trade using fib levels. All right. So let's say that I got in this trade in this on this pullback to the demand zone here at 209.96 by 201.79. Well, this move to the upside, this bullish move began on this first candle that showed upside movement. So I will start my fibs there. Then I will go to the high, and I can see that the 38.2 is at 220.01. This is what I mean by not getting wicked out of the trade, but rather committing to a candle close. So 220.01. You can see on today's candle, this bottoming wick, it definitely broke down below 220.01 at some point today. But you can see that buyers stepped in at the bottom of that bull channel so far, and price is currently above 220.01. So at the end of the day, if I were in a swing position from demand down here, I would look to see if today's candle is closing above 220.01. If it is, then I would be interested, or my plan is to stay in the swing position. Now, very important to note, I do not like to let a winning trade turn into a losing trade. So after I have trimmed for profits twice, or I have trimmed for at least 30% profits, then I set a break even stop. A break even stop for me is set based on what price I paid for the options. So the premium price paid. For instance, here on Amazon, it would have been the 210 calls, and this is just a hypothetical example. So it's right now trading at 1240. So let's say I got in at the money, right, for $3.80. I would have a break even stop set at $3.80 in the event that there was a big, huge down day. At least the profits that I had gained on this trade up to here would not be lost. The runner, what I call a runner, can be one, it's typically one or two contracts, but the runner would be in play to gain additional profits. But at worst case scenario, I have the break even stop in that I do not let it get below the price I paid for the option. All right. So this is how you play it from a swing trade perspective. The only difference is the time frame chart that you're watching and the time frame candle that I am committed to closing inside of the bull channel. So you can see even on this day, we got a pullback. It would have been below the 382, but the day closed above the 382, meaning I would stay in this trade to the upside. Same with today. At the end of the day, I'm checking this, make sure that it's closing above 220. If it is, I stay in and collect profits again on the way back up to the supply zone. Now, you might be asking, does that work for the downside? So, if I were in a swing position on Chevron, for instance, going short at supply, and playing it down, ultimate target, right? The ultimate target would be 136. But I am in contracts still. And how do I know that this is potentially turning around to the upside before getting to my target? I do the same thing. I run my fibs starting at the top down to the bottom because we're measuring a downtrend. And then I mark an alert at 149.77, which is the top of what we call a bear channel. Bear channel, same Fibonacci levels, but because we're talking about a downtrend, this is a bear channel, and in an uptrend, it is a bull channel. So even trading to the downside, the way for me to stay in winning positions is to let my runners run as long as the 38.2 does not have a candle close above it in this case. Again, I would just create an alert here. And when my alert goes off, I know to watch it for an end of day trade. Same would be true, and let me show you an example that if I went short IBIT today below the PMZ because I was watching this trade, I know that it gapped or went below the PMZ this morning. So say that I was trading this to the downside on the break of the PMZ. I would start my fibs here. I would have taken profits here, taken profits again here, and then right here, I'm in a runner with my ultimate target 51.54. Well, once price got above the 382 and this candle closed above the 382, I would exit any remaining contracts that I had on that were left, right? They would still be for profit, but when this bear channel was had a candle close above it, that's my yellow flag warning sign that we could be headed to the upside. I'll show you another example of how to measure to the upside on a day trading scenario. A starter position here at 52.14 and adding at 51.07. The trade or the movement began to the upside here on this candle at approximately 12:10 this afternoon. That's Eastern time. I would measure all the way up to the high, which it's coming into another trim area. So I would trim here, right? Stay in the trade as long as 5309 does not have, and I would be using a 30-minute candle because of time of day. I only pay attention and stay on those 5-minute candles the first hour and a half to 2 hours of the day. The reason being is that during the midday, price can get very choppy, and the whole idea is not to get stopped out on a winning position in chop or with low volume, not a lot of market participation. So I go to a higher time frame chart and a higher time frame candle to stay in the trade. So in this case, with IBIT, which I had a bid here and it didn't get filled, believe it or not. So I am not in the trade. I wish I were. But anyone in the trendy room listening to me, if your bid did get filled down here, Your stop, well, you would be trimming again here. You would trim at the PMZ, then again here at 53.69. And your stop for any remaining contracts would be a 30-minute candle close below 53.09. All right. Does anyone have any examples or a possibly swing trades or day trades that you're currently in that you would like to see some levels for? Just let me know by in the chat putting the name of the ticker as well as if it's a swing trade, how long until expiration, and I will take a look at it. So East Coast Ryan for SOUN, when is your expiration on that, my friend? That tells me what time frame chart I'm going to measure fibs from. 2 weeks, all right? So let's take a look at the daily candles, all right? All right, here we are. Okay, so for me, all of this in here, this created inside and up, which is a demand zone. And I'm not sure when you got in the trade, obviously, but I would still measure from this candle here where the move started back to the upside after price turned down into the demand zone and did exactly what we would expect it to do because we are supply and demand traders. Okay. So this would have been my demand zone on the daily for SUN. We created it on this candle. The very next day, you came down and tested it, and then you got rolling out of the demand zone. So I would run my fibs like this. Okay. And the 382 or the stop would be a daily candle close below 21.98, Ryan. So that's how I would stay in this winning trade. I do want to point out that if you have not taken profits yet, um, this trendy edge right up here where price came into, that would be an area to take some profit. So hopefully you've gathered some profits. You have a break even stop in place for what you paid for the option, and then stay in the trade as long as the bull channel of 21.98 holds as support on a daily candle close. Up next, TJ is asking about QBTS, and she has it for 2 weeks. So I'm going to stay on a daily chart looking at QBTS. You have an inside and up candle formation right here. All right, this is our demand zone. This is the candle after this big drop down that price began moving to the upside. First, TJ, here are some areas to trim at if you have not already trimmed your position. 1022 by 1141. Now let's measure and find our bull channel, which is $9.19. So as long as the daily candle closes above $9.19, I would stay in the trade, again targeting 1022 by 1141. Above there, so a supply zone above this level, you got to go way back. Here is your daily supply, TJ. And this is what I would use as my target for the overall trade. All right. Now let me go back to current price. Oh, wow. Look at that. Had no idea, but it actually hit it almost to the tick, that supply zone. So, TJ, stay in the trade as long as 919 holds as support. Trimming 1022, 1141 by 1323. Great trade, TJ. Silver Spoon is asking about levels for McDonald's on the daily chart. So let's look at Mickey D's. Look at the daily chart here. Um, Silver Spoon, can you tell me when you got in this position? Because with this big gap down on this daily candle and the demand zone being so close, I would imagine you're below the 38.2. Okay, you're not in the trade yet. Well, I can tell you got demand down here at 287.82 by 281.72. That was created back here. It was tested, and virtually today tested. All right, this is a buy the dip opportunity in McDonald's. And as far as where I would look to trim, number one is this gap down here today because it is an inside and down candle formation. All right, you also have inside and then down candle formation here. And then ultimately this zone to the top 301 by 303. But know that you do have a potential supply zone being created here at 291.47 by 296.48. This was just a test of this previously created supply zone. So this would be completely hypothetical because you're not in the position. But let's say that price comes down to the lower monthly edge here inside of this demand at 285.78 and you get in the trade and then price bounces back up to where this newly created supply zone is at. At that point in time, if that were to happen, your stop would be 289.32. All right. Carlos would like to look at game for 3 months. You got it, Carlos. So for a 3 month trade, I'm going to pay attention to that weekly chart rather than a daily chart. All right. So let's look at the weekly. Let me clear this. I don't typically trade game, so it's charted for, yeah, I don't know which zone it was charted for. You have inside and down right here. This was an area, top of a very choppy area. Price has gotten inside of it now. So what I'm going to do here is I'm going to run some quadrant lines, which basically just cuts this large zone in quarters, all right? And each one of these quarters is an area that you can trim or move your stops up. So I am hoping that you got in game down here near this demand zone or the bottom of what was chop. So I'm going to measure from here to the high that was recently created. And as long as price can hold above, looks like 29.16, that would be an area that as long as the weekly candle closes above 29.16, I would stay in your trade. Next targets would be 38.37, 43.18, and then $48. All right, I'm going to answer 007's question here. There's a big price difference between the basic elite packages for the trendy zones class. Do you need the full trendy script bundle, or is the PMZ itself enough to do supply and demand trading that we do? All right, 007, the PMZ actually has nothing to do with supply and demand. Hold on one second here, guys. I need to um mm, I need to adjust a price level here. If you're in gold with me and you are waiting for the next trim, I'm on trim here because I got an alert on my GC futures chart that the gold futures were coming into an area of resistance. So I am trimming my gold trade there. All right. So as I was saying, 007, the PMZ has nothing to do with supply and demand. The PMZ is an indicator that John created a little over a decade ago because what he found in his trading room at that time is people had a very, very hard time staying or waiting for levels bigger, like demand zones if they were looking to go long, or supply zones if they were looking to go short. Let me give you an example here. Let's see, probably Google. So people had a hard time waiting for a bigger demand zone. So Google is a great example here. If we were just giving you supply and demand levels on these larger time frames because we don't use smaller than a 4-hour chart and call it demand. So, on from a demand perspective, buy the dip actually occurs on Google at 186.26. Okay. And it's just there's will price pull back to 186.26 at some point? Yes, probably. But a lot of people like to day trade and they were losing patience waiting for a demand zone to be hit. So, what John did is he created the pre market zone using price action during the overnight session and the pre market session to create a zone that above the zone you're looking to go long, below the zone looking to go short. The PMZ is simply an alternative place that you can get in a day trade. So 007, if you're wanting to trade supply and demand like we trade supply and demand, the trendy script bundle that includes all of the indicators, including the PMZ, is the best way to go because the other indicators, the cloud we use as a barometer to stay in trades is typically how we use the EMA cloud. Then your trendy edges the lower edge represents a playing field of demand and the upper edge a playing field of supply for a day trading scenario. And then your weekly edges trades you plan to be in for 2 to 5 days. Monthly edges would be a month, etc. But those are actually identifying playing fields of demand and supply. So if you're wanting to trade supply and demand like we do, then I would have to say that the trendy script bundle, which includes all the indicators, is the better one to choose. All right. Hustle Bustle is asking a question here. Give me one second. I need to take a drink. My throat is getting dry. All right, sorry about that. All right, hustle bustle. Can you take a look at TSM? I have a 210, 220 February monthly call debit spread. Hold on one second. Sorry. All right. Sorry. I'm currently down slightly on the trade, but hoping to stay in the trade as long as we don't break structure. Wondering where you would trim. You bet. Let's take a look at TSM. So you have them all the way out to the February monthlies, which is, gosh, 2 months, right? About 2 months. So I'm going to give you the levels that I have on my chart. The demand zone on the daily chart is here between, let's call it 201 to 190, 198, so 192. I personally would stay in the trade as long as price does not break down below demand. So if I am using my fib technique, I would stay in the trade as long as price stays above 197.79. As far as trims go, I would use this upper monthly edge, which is going to be January's upper monthly edge here at 205.88 from a smaller time frame perspective. And I know you're in the February monthly, so this really doesn't apply. But if you wanted to take some quick profits, the weekly edge mid at 203.62 would be the place I would do that. So I would trim 205.88. Then this topping wick where we are creating inside and down candle formation at 208.05, and then the all-time high 212.60 would be some of my targets to the upside. All right? Awesome. Very good. All right, let's take a look at the GLD trade that I mentioned and the fact that I have taken profits on half of my position, left with a half position. And let's run some fibs and see where I am at and where I want to stay in the trade as long as, again, the 382 holds as support. As we made a higher high here where I trimmed, as we made that higher high, you need to move your fibs along with that higher high. So now, whereas my break even was at 240.07, I believe, it's now at 240.19. So I need to move my alert up. And this is how, when staying in winning trades and using Fibonacci levels, as price continues up, my stop is moving up with it. So I'm not losing out on profits as price moves up because my stop is moving up with it. And so at the very least, I would be protecting additional profits. All right. So now on the GLD trade that we are in, I want to stay in the remaining position as long as 240.19 holds as support. All right. You're welcome, TJ and Hustle Bustle 007, Carlos M. How do I put a stop for call options? So for me, because I commit to candle closes here, I would 240.19. I just have an alert here because I commit to this candle close. But if you're looking to put a stop on, say a break even stop, let me remove this because it won't let me do that otherwise. And I want to go to my position right here. I paid $1.26 for these contracts. All right. I am left with two contracts. So I need a break even stop because I have collected profits along the way. Right here, where it says order and then it says limit, I'm going to go down and choose stop. Remember, I paid $1.26, so I would adjust this price to $1.26. Now, this is very important. Please look at the option chain. If you have a wide margin between the bid and the ask, you need to give yourself a little grace down here. Okay? So I paid 126. I've collected profits on a couple of contracts here. Because there is a 6-point gap, I could adjust my break even stop by that 6 points. So it would be 120. All right. That's right now, it's not that big of a deal because GLD doesn't have a big gap between the bid and the ask. But if you're looking at a name that does have a big gap here and you want to set that break even stop, you need to do it taking into account that you could be unnecessarily stopped out because they're going to use the least amount as your stop. So 139 right here would be the stop. If you were to put in a stop right now, 139 would be the level that they would be using for your stop. So keep that in mind and always look at how wide the bid and ask is right there. So this one is not that wide, but sometimes you'll see 20 points or 20 cents or really equals $20 gap there. And you don't want to get filled on a stop on a real low end when you have a wide spread there because it's completely unnecessary. What I do if there is a big gap between the bid and ask is I just stick to the plan of using an alert. All right. That's what I personally do. But this trade, I paid $1.26 for those options, and I have two of them left. So I put right here, you hit confirm and send, you read it, make sure it says stop and the price you paid for the option, and then hit send. And then if I go back to my chart, I have a break even stop in place. So this trade, the profits that I have gained on it, I would not allow it to become a loser. Yeah. So options trader asks, Melissa, that was really very helpful. For yourself, you put an alert, not the stop loss. When alert trigger, then you apply the stop loss, right? I do put a break even stop in once I have trimmed twice, which this position I have trimmed twice. Now the remaining position, the worst I'm going to do is get out for what I paid for them. Okay. So I think it's important that I don't give back any profits on these remaining contracts, but I know that I need to trim again at 240.89. So I do not have the capability because I have a bid in, a stop loss bid in for this particular position right here. I can't create a sell here because it would look like I'm trying to sell more contracts than what I actually have a position of. So this now becomes an alert to trim. If my alert goes off, I have to go and cancel my break even stop and trim a contract here. This is the bottom of the PMZ. Okay. Sam asked, is it true that algos hunt for our stops? Well, I'm going to tell you this. We would like to think that the big market movers are paying attention to us, but unless you're trading size that is very, 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 very large, market moving large, then no, I don't believe they are out to hunt for our stops. I don't think they pay any attention to the average retail trader at all. That's my opinion, Sam, completely. Hustle Bustle says the stop loss can get you in trouble if you open before the stop significantly. It would trigger a market order and you may want to hold depending on price. Yeah, so on this, you'll notice it's just today. I didn't set a good to cancel here, and that's because price is so very close to it. Now, if we went all the way up to the upper daily edge today up here at 241.85 on GLD, then very possibly I would leave this on till good to cancel because we are so far away from it. But tomorrow morning, if we gap down overnight and it's still inside of this demand zone, I have the option to add back in the contracts that I trimmed off and just trade it again, playing the chop that gold has been in for a couple of weeks now, just playing that chop. So I don't leave these on overnight unless price has moved so much in my favor that I don't anticipate a big gap down back to it. All right. Yeah, that's how I beat that one. Let's look at some potential swing trades that I am paying attention to. Uh, I'm going to be out of town, going on a cruise with my grandkids, so I won't be taking swing trades, but I can tell you that there are some names that are setting up at levels that I would be interested in trading if I were not going to be on vacation in what, a day and a half of market action here. um, TSLL is a leveraged bull ETF for Tesla. I trade from a small cash account here, and so it is more affordable to me. But if you'll look at the Tesla chart, it's going to look just like this. Tesla has pulled back into a 4-hour demand zone that I would be interested in taking a potential swing trade from. We've reclaimed the lower weekly edge right here, this yellow line on my chart. This is a playing field of demand. Now, my first trim would be up here at 432, but it's currently trading at 422, so that'd be about $10 to the upside. And then I would target first this supply zone here where you created a couple of inside and down candle formations. And then ultimately the bigger zone above at 464.80 by 488.54. Uh, so the way that I trade that is using TSLL because it's affordable for my account. My target here, these are trims on the way back up. Another name that I would be watching and interested to trade is Apple. So Apple has been very strong, but there is a beautiful demand zone down here at about 247 by 245. I like this demand zone. Notice this bottoming wick here on the 4-hour chart at about 250.39. That's an area, this bottoming wick is evidence of buying pressure. There was buying going on at this level. And so I have it marked on the chart. And this morning on the down move, we got very close to that level. As a matter of fact, within about 40 cents of that level. And you can see another bottoming wick where buyers stepped in again. But we created supply right here at 254.50. And then my ultimate target would be 258.55 to 260.10. So I like to pay attention to the popular bigger names that are outperforming others. So Apple is one, Tesla is one, Amazon's one. This was a beautiful dip buy this morning on Amazon between 219.85 and 215.20. First target 223.68 and then ultimately 226.69 by 230. I like this for a trade into the next like January 17th monthlies. I like Amazon as well. AVGO, Broadcom. This thing has been on absolute fire. I don't want to be a buyer up here. This is not where I want to buy. Where I want to buy is down here. Now you have a lower weekly edge here at 227.59. I would start a position. So whatever you allocate to each trade, I would use half of that allocation here at the lower weekly edge. Then I would save half the allocation to get long here 225 to 218.91. This is where I would add to my position. Then on the way back up, your upper weekly edge, as well as that January upper monthly edge, those are trims on the way back up. Targeting 247.52 by 256. I like Broadcom, dip buy in demand, back to supply. What else? Oh, Google. Can't forget Google. Google is definitely outperforming today. It is red, granted, but 26 cents, 30 cents. So it's definitely outperforming. What I don't like about Google, where it's at right now, is simply because it has come into an inside and down candle formation right now. Where would I like to buy it? The clearance rack, etc. I have an alert here at 187.21 and all the way down to this 4-hour beautiful untested demand zone 186.26 by 183.92. As far as trims on the way back up, obviously anytime you have a trendy edge above price, it is considered resistance, okay? Even though this is a lower weekly edge, if price does come down into this 4-hour demand zone, this area here, what was support or what was demand, becomes resistance. And I would look to trim there between 190.88 and 191.85, where we have created this inside and down candle formation. Above there, the weekly edge mid at 193.44. Then my ultimate target to the upside is the supply zone that was created. You got one zone here, you got another zone here, 195.58, 201.42. That is the all-time high for Google. So again, here is the sell, here is the clearance. I like to buy them on sell or clearance. So waiting for a pullback like that. NVIDIA, honestly, NVIDIA is pretty stuck in a range. The green zone that you see down here represents the lower end of the range. The red zone up here, the upper end of the range. We have been just trading back and forth between here, and we actually created a lower supply zone, and that's where NVIDIA finds itself right now. Okay. If price can get above 141.07, then my next target is 144.63 by 152.89. If price were to pull back to the lower end of where buyers have been stepping in here since October, then this is a buy the dip opportunity for me for NVIDIA, 128.74 by 121.83. What else? Anybody have any other names you would like me to look at? I have about 9 minutes to do that. Carlos asks, when will you start updating your yearly and quarterly charts? Carlos, I've actually already identified some names that I have charted out quarterly and yearly, even monthly. And I did a session here in the Essentials room on some of those names. And if you're a part of the Trendy Trading Room, I went more in depth on very specific trade ideas, and you can find that video in the archive videos. TJ would like to look at VRT for a month, so let me pull up that chart. If you're planning to be in a trade for a month, I like to use the daily chart and I like to use our monthly trendy edges. So let's take a look at that from a January. This is a future edge right there at or about 115. Okay. This week's lower weekly edge is right below it. You got a double stack of edges there. And then the December demand is down here at 109.26. I would simply draw a zone right here like this. Not overcomplicate it. Use those lower monthly edges and trade from this zone on VRT. You do have inside and down candle formation, which equals supply right here. This would be your first target, TJ. And then you would want to stay in the trade as long as the bull channel holds as support. All right. If price can get above this supply zone, then I would target these upper zones here, right? This one right here to the all-time high. Sorry, let me pull that down. Or I don't know if this is all-time high, but it's high over the last 52 weeks. And that would be your ultimate target in the event that price can get above that first supply zone, the top of that first supply zone at 129. So taking the trade from here, this is your first target. This is your ultimate target to the upside, TJ. All right. Great trading so far today. I know we have had some good winners in the trendy room. I'm going back one time and looking at my GLD trade, looking to make sure that we are holding the bull channel, which we are. Just this a little right there. And we're still holding above the bull channel. That means I stay in the trade. My next trim again is the PMZ here because price dropped below it It is now resistant, so 240.87 would be my next trim. Here's my break even stop. The profits that I've collected so far will remain profits because the remainder of my position has a break even stop. In the event we get up here to 40.87, I can cancel this, trim another contract, and then ride the runner as long as the 382 holds as support. All right, options trader asks, do you use only this one indicator? So the trendy script bundle actually includes several indicators. And yes, I only use the trendy indicators. So that would be the answer. But there's more than one indicator included in the bundle. The great thing about the trendy indicators is there's no updates. So the code has stayed the same for the trendy indicators, so I don't have to update them or anything like that. Each day, each week, each month, the edges print on my screen. They stay there for the length of time they're representing. So your daily edges stay in place for the entire day. Your weekly edges stay in place for the entire week. Your PMZ stays in place for the entire day. It doesn't move. So I find that very convenient because I'm not real tech savvy. So doing updates can sometimes be cumbersome for me. So I like that about the trendy indicators. But yeah, um, Mirza, if you happen to be listening, is there any way you can put the link for the trendy script bundle in the chat? Tom asks, how do I get this workspace on TOS? Uh, so you purchase the trendy script bundle, right? And once you have the indicators, there is a video that teaches you how to load them all on your charts. All right. And option trader, if Mirza doesn't put it in the chat, once I get off of here, I will put it in the chat for you. Okay. So if you're in the gold trade with me, 240.65. Oh, Mirza, you are awesome. Thank you. Thank you. Thank you. 240.65. This level is from, this is where that down move began this morning. So that 240.65 is between the 382 and the 50 fibs right there. All right. So if you want to trim there, you can. I will decide just based on what the market is looking like and what time of day, whether I go ahead and take a trim there and get down to just one contract, which would be $126 of risk, not a huge amount of risk for me to carry overnight in the event that the 382 still holds as support. And you can see we are making higher highs here. So I moved my fibs. Now 240.20. I'm going to set my alert just above there to alert. And I want to make sure that the 30-minute candle closes above there. All right, guys, y'all have been awesome as always. Thank you for your time. I hope you learned something from this and a way that you could possibly utilize Fibonacci to stay in winning trades. Y'all have a great rest of your day. Happy New Year to each and every one of you, and I will see you next week.